Hello, everyone. My name is Stefan Choi. Welcome to Trading with Livevol. This is where I trade my own Reg T account, and I use LVX to do it. So yesterday, I'm kind of working after the close. I was looking at FOXA stock, and then I saw this like gigantic spike, right? And even without hearing the news, I knew something was amiss, so I typed in TWX, and I see it down like 10 bucks, right? And then the news came out that Fox withdrew their bid of Time Warner, and I actually started laughing. I started laughing not because, you know, I was so happy. I was laughing because I couldn't believe that I was wrong again, right? So like, it's almost like if I bet in all these merger stocks, if I actually bet against what I actually bet on, I would have done far better. You know, it's actually a miracle that I'm actually up, only being right on 2 out of like, I don't know how many I did, like 10, right? So, you know, just TRW was the one before this where I lost like 6-7 grand, and now in Time Warner it looks like I'm going to lose like 12 grand. So let me show you my account here. You see how I'm down 20? But yesterday after the, it's kind of misleading because I've been buying stock, and so yesterday I bought 700 shares for $76.35 after the market. I was kind of thinking like, you know, maybe it's a good time to buy because you know, I think generally once somebody makes a bid like that, and now they pulled it back, it almost puts some pressure on Time Warner to do something quickly, or you know, or maybe it's a very low chance, but maybe it's a whole ploy for Murdoch just to kind of, you know, give the bird to the Time Warner guys, right? It's like the ultimate insult, kind of just to walk away without even trying to do anything more, which kind of shows you how difficult maybe it was in the first place. So yeah, I mean, it's, I guess it's, for me, it's already, you know, it's beyond frustrating, but I think I'm kind of over it already. And for me, I'm just kind of looking at my positions, right? So basically, I have these calls that are pretty much worthless now, but then I have these puts, right? They're in the money. So every 100 shares that I buy, I'm going to turn them into calls. So essentially, when I buy 100 shares, I'm taking one of these put and then putting it here, right? So you see how I'm long 700 of these shares, and then I'm long 10 puts. By buying 700 shares, if I were to do it in just options, this would be my position. Kind of like this, right? So I basically turned these 7 into these calls, and if it goes back up, basically synthetically I'm long, I'm just long these calls right here, August 80s. So every 100 shares I buy, if I buy 300 more shares, I'm synthetically long these August 10, August 80 calls, and then if I buy another 1,000, I'll be long August 85 calls. So I'm basically just locking it in, and what my, because I'm going to lose 1-to-1 if the stock goes up. The only time I won't lose is if the stock goes beyond 80. So I think what I'm going to do is I'm going to buy basically 2,000 shares of stock to turn all of these into calls until August 8th and then see what happens, right? I think it might get a bounce. It might not. Maybe if I think it's going to get a bounce, I should just bet against it. Should be almost what I should do. But anyway, I think you know, it's going to be around here. I thought it might be around 76 bucks was what I thought, but who knows? It was such a drastic kind of end that maybe the shock might actually get the stock down to like 72 bucks. I'm not sure. So sometimes like these stocks kind of just then drift lower, right? So there's the initial like people who buy, who were like leaning short or whatever reason, they're buying stock. Maybe somebody like me who have those deep puts, but essentially once they realize nothing's going to happen, the stock slowly drifts back to 72. Or sometimes it might actually pick up again because they actually reevaluate this company, and the analysts think like even as a standalone company, it might be worth $80, and then I'll start pushing up again, right? I talked to you guys about AZM before, so here was like kind of the takeover rumor. It got announced, they walked away, and basically that day was kind of the low, and then it kind of started drifting up. Now, I'm not saying that's what's going to happen to Time Warner, but that's what possibly could happen to Time Warner. So we'll see. So I'm, you know, I mean, for me, I'm thinking like, well, what am I losing here, right? So I'm just turning them into calls, and if something crazy happens where they start talking back, and you know, look at this, it's like 16th, so it's not even like, you know, chance of that happening is pretty low. So I'm just gonna lock it in. At some point, if Time Warner goes up and these actually show some value of like $1 or something, maybe I can sell. But for now, I'm just gonna leave them and try to buy another 1,300 shares to turn them on to calls. So by basically buying puts and stock, it's same thing as buying the same strike call. So I'm going to do this. I'm going to buy 1,300 more shares and turn it over that way. So that's it with Time Warner and Fox, and pretty much all my other trading that's going on. You know, I basically lost a third of my account pretty much in the last like week and a half when the market started going down because I was leaning so long. So I was trying to get it up to 200, and basically it backfired on me, and I lost like 45 or something. So it's kind of frustrating. Usually when this kind of stuff happens, I just take a step back and take it a little easier. Like I told you guys, I like to be aggressive when I'm winning. When I'm losing, I kind of have to see like what am I doing wrong, if anything, and try to reevaluate. And basically when you're not doing too well, you shouldn't be aggressive, at least for me, because that tend to exacerbate the losses, right? So ever since I've been losing, I've been cutting back. So at one point, I think this was like 1.3 million. Now it's only down to 200. So it's pretty low, and you know, most of my premium is not, you know, it's pretty much coming from the Trader Minute guys. So those guys been kind of they suffered a little too after a quick start, just because, you know, the market's going down and they're long calls. So I think you know, they bought calls, I don't know how many times, but if you look at it, for any of you guys out there, I think they bought calls like over 20 times in a row. And it's been working well because the market's been going up the last couple of months. But for now, you know, we'll see what happens. Looks like they're looking for more calls, but we'll see how that works out. So one of the things I did want to talk to you guys about, because, you know, I'm constantly just talking about my stock, was I do write a blog for Fidelity. So when you guys go to fidelity.com and you're a member there, or you have an account there, I pretty much write their options blog every day. So I was trying to figure out something to write, and something interesting. Um, I just noticed something interesting. So basically, Facebook, if you look at it, it's at the bottom 5 percentile. Look at Twitter, bottom 3 percentile. Tesla, bottom 5 percentile. So you see how these stocks at the bottom 5, but if you look at SPX, it's like at the 53 percentile, right? So basically, what's happening is those option volatility is way low. So what I was thinking was, since Facebook had such great earnings, and I bought some calls here, it didn't work out, I got out, but it might be actually good to, if you are like bullish on certain stocks, right? So I think you can actually do an analysis, a combination analysis of, let's say, volatility that's low, that is supported by some good fundamentals. Now, when I say good fundamentals, I guess for me, I'm not talking about PE ratio in terms of Facebook, Twitter, or Tesla, but more of the growth factor, and according to their last earnings, looks like they had pretty good performances and such. So yeah, if you guys didn't want to do this, you can pick something else. Like more of the industrial stuff, like Caterpillar looked like that bad earnings. Yeah, so you just look through it and look at low vol, but these guys aren't low vol either. Let's see. Yeah, 6 to 8 percentile. So basically, you want to pick something that is low vol, that's good fundamentals, and it might be worth it to buy a long-term call. So let's say, when's the next earnings? July, October. So it looks like the November expiration is, right. See, the October is only 33, December is 36, so I know the options are in this. You can maybe buy, some of these calls, December calls, if you think it's going to go higher. But, or sell some puts maybe. You might want to sell the 75, 65 put spread. Let's see. 75, 65. Yeah, for maybe a little over $4, and you're basically long the stock from 71.5 to 75 or something, right? So you're kind of like, it's almost like a 40-60 bet on your trade, and then you'll see how it goes. I thought about trading, but this is why I'm not trading, just because I've been doing horrible. So just to let you guys know, most of this money I lost was because I was doubling down on the calls. So I was thinking like it was going to go up, and basically I was getting burnt. So in TWX, so yesterday it had me making like 6-7 grand, just because the stock closed at 85.19, but as you guys can see, I actually bought 700 shares for 76.35. So it gave me like an artificial boost in P&L overnight, because they was marking the stock at 85.16, right? But everyone knows it wasn't that. So I've lost about 13 here. As you guys know, I lost about 6 or 7 in TRW. So in both of these stocks combined, I lost about 20. And before that, after Shire Pharmaceuticals, I was up about, I think, like 35, maybe between 30 and 40. So I'm up like between 10 and 20,000 on all my mergers. But you guys can see like how bad I've done. Like LO wrong, RAI wrong, TRW wrong, TWX wrong. I mean, like the list of stocks that my batting average is like 100. I'm just lucky that I have a winning net. But I think what you guys can get out of this other than the fact that I've been wrong most of the time, so maybe next time I make a bet, you bet the other side, is the fact that like that's why I play these things. So even though I've been right like 2 out of, who knows, like 10, 11, you know, being wrong from like like Mankind. I think Hillshire was the only other one that I got correct. IGT, you know, I can just mention a whole list of them. Even though I only got 2 out of the 10 or something, in the end, my account was still net positive if I don't account for all the other trading I put in, right? So, so that's, you know, that's, I hope that you can kind of see if you can get good at that, you can make a tremendous amount of money. You know, my thinking is like even if I got right maybe 5 or 6 out of the 10 instead of 2 out of the 10, you know, I would probably be at over 200,000 right now. But it is what it is. But I'm gonna keep doing them. But I just have to be a little more careful, right? Because whatever it is, like I'm in a bad streak. I'm not reading it right. You know, I did get a weird feeling in TWX because it had that spike. It was very similar to TRW, where it had this like spike at the end of the day, making it seem like there was going to be some good news. And then it, you know, it just got burnt. You can't even see it anymore because it's like this little spike right here. It went to like 87 bucks, right? Anyway. It is what it is. Hope your trading is going better. I came early today just because I got a bunch of stuff to do. So this was the only time I can do it. I hope everything goes well. As you can see, I am working stock at 74.51. I think if I get hit there, I might just buy the whole amount and just call it a day. But hopefully everything goes well, and I'll talk to you guys on Wednesday. Take care.